All right, guys, welcome back to another episode of Matt Money. I am your host, Matt, your boy Money. And today we're going to be talking about two specific things. One, we're going to be talking about how you actually get these dividends. Maybe you're new to investing and maybe you have heard a lot about dividend investing. You want to give it a try, see if it fits into your portfolio. So we'll touch a little bit about how you actually get these dividends. And what you need to do in order to start receiving dividends. And then we'll also be touching a little bit more on the spreadsheet. I've had some questions from folks saying, hey, can you give us an idea as to how you can do some monthly analysis and some forecasting of different portfolio values and in your goals versus actuals tab. Which you'll see a little bit down here as well. Basically, wanting people to kind of forecast out how they can get their additional capital that they need in order to meet their goals based off of kind of their average dividend yield. So we'll kind of touch on that a little bit later in the video, and that was been requested by a couple people. So unfortunately, it's probably not going to mean a lot to you guys if you don't have the spreadsheet, or you can use this particular video to kind of create your own if you don't want to download the spreadsheet and you want to create your own from scratch, just to coach yourself, I guess, and how to create a spreadsheet like this. So all of it's possible utilizing Google Sheets. So probably a lot of these formulas you can just grab if you really want them to, but otherwise you can grab it in the description below. So let's just take a quick example. So I've had a lot of people say, hey, all these people that own this company have been getting paid dividends. I think the specifically was like RioCan paid dividends either yesterday or the day before, or maybe it was today. I don't remember. And somebody said, hey, I didn't get my dividend. What gives? And basically the example was, I think they bought the shares of RioCan earlier this month and in May, and I think they needed to own them by the end of April. And what I mean by that is there's 3 dates specifically that you need to know when you invest in a company every single quarter. So there's something called the ex-dividend date, which is here in column R. Then we have the pay date here in column T. And there's actually a third thing, a third date, which isn't really relevant for you to know, but it is important if depending on how closely you're kind of tracking your dividends, and it's called the record date. And what the record date is, it basically says, okay, at this date, this is what the price was of the shares. If we were to reinvest these dividends, this is the share price we'd be reinvesting them at, and so forth and so on. The most important date I think you should know if you're going to be a dividend investor is the ex-dividend date. And the reason why is, yes, the pay date is important, and it's the day that's very happy you get your dividends. You can use them as you wish. You can reinvest them. You can use it to pay bills, or you can just use them to go on a shopping spree, however you see fit, or open a different position in a different company. But I think that the most important date for you to know is, let's just say, this ex-dividend date. And what the ex-dividend date is it's the date where you need to own those shares in your possession. Otherwise, you're not going to get that dividend for that quarter or semi-annual payment, depending on how the company pays. And so what you see on here is a bunch of different ex-dividend dates going all the way down, all the positions that I have that pay a dividend. And so let's just take Shell or USB, for example, US Bank Corp. So next week on the 13th of May is the ex-dividend date for this company. So what this basically means is, on the 13th, if I don't have those shares in my possession already, meaning I had them on the 12th at close of business, and when the market opens on the 13th, if I didn't have those in my possession already, I don't get this 30-cent per share dividend. If I buy the stock on the 13th of May, that means I do not get this 30-cent dividend per share. And for example, just based off of, this is Visa, I'm sorry, not US Bank, but Visa. And just based off of that scenario, let's just say I purchase shares on June 1st, expecting to get paid on June 2nd, this $6 dividend payment, because I have 20 shares of Visa. I'm not going to get it because I needed to own the shares on the 12th, the close of business on the 12th, and the opening of the market on the 13th to be able to receive these shares. Now, that's highly important, And another one way you can obviously find these dates is if you have U.S. companies and you have this tracker already, it is built in, or you can copy the formula that we have in here if it really so works for you, or you can go to, let's just say, Yahoo Finance. So we'll go to like an AT&T example, and you'll kind of just go and say Yahoo Finance and put in T, and you'll see that there's an ex-dividend date. And so this isn't any different than what would show up on the tracker. We just pull our information from NASDAQ for the tracker. So everything should be the same. The companies report this to, say, NASDAQ or Yahoo Finance and put it up on the site. And so we just pull it into the tracker so that way people can have it stored in one location. So instead of, say, looking up AT&T single-handedly, they have AT&T, they have Verizon, whatever company that they have in their tracker, they now have the ex-dividend date and the pay date so they can forecast out their dividend payments. And we'll touch a little bit more on that in a moment. But for this example, you would need to have had ownership of those shares by the 7th close of business and the opening of the market on the 8th of April. So if you bought the shares now, obviously you wouldn't have gotten the dividend most recently. And same thing with Wells Fargo. I think, for example, let's go to Wells Fargo. I think that they had their ex-dividend date a couple days ago. And so if you were to go to Wells Fargo and you didn't have them as a close of business on Tuesday or Wednesday this week, which was the 6th, and when the market opened on the 7th, because I believe today is the 8th, yes. So if you didn't have them at close of business on Wednesday, when the market opened yesterday morning, you will not get your dividend on June 1st, which is when they are expected to pay. They generally pay on March 1st, June 1st, or the next business day. That is after the 1st on the 3rd month of every quarter. So that hopefully can give you an idea. So if you didn't have these shares close business Wednesday, opening up yesterday on the 7th, you won't get your dividend. If you buy them, let's just say today you bought Wells Fargo and you are expecting them to pay you a dividend on the 1st, you will not. You will get your first dividend on September 1st, which is the 9th month or the 3rd month of the 3rd quarter, just like Wells Fargo always pays. So hopefully that allows you to understand if, let's just say, you want to sell a dividend paying company like Wells Fargo. Maybe instead of selling it, let's just say Monday, you would have said, well, I can hold off 2 or so days because it's going to pay me, let's just say, X amount in dividends. Like for me, now I have about close to 500 shares, so I'm going to be getting paid about $250 every single quarter from Wells Fargo. So instead of selling it, I'd be like, I don't think it's going to move that much where I'll, say, lose capital gains of $250 or so. I'll wait to get my my ex-dividend date, and then I'll sell it. So that way I can take that in cash or reinvest it or what have you. So hopefully that explains what you need to do in order to get the dividends. Now, dividends vary differently by each company. So just because you have one company doesn't mean they're going to pay the same dividend. Each dividend is dictated by the board how much they can allot. So on a company-wide basis, they say we can afford $1 billion, let's say, in dividends, or $10 billion in dividends a year based off of the sort of cash flow that we have. And then that sort of gets determined by however many shares there are. So in the case of, say, Wells Fargo, there's like 4.1 billion shares. So that 10 or so billion dollars a year in dividends gets divided by 4, so $2.5 billion every quarter because they pay quarterly, and then they would divide that by the 4.1 billion because it's dividends per share, and that's how you get approximately that 50 to 60 cents per share that I believe Wells Fargo kind of pays. So it's not exact, but in this example, let's just say for Wells Fargo, they're paying close to $10 billion in dividends a year, and you're going to be basically getting around 50 to 51 cents or something like that per quarter. It might be a little bit less, might be a little bit more. I don't remember exactly, so I apologize. But anyway, hopefully it's relatively close for you guys there, and it gives you at least an understanding as to what you need to do in order to start getting some of these dividends. Now, of course, like I mentioned, some companies might pay 10 billion in dividends a year, like Wells Fargo. Some companies, will pay $1 billion, and so it's all very dependent on what their board kind of really wants to pay out, because every company is different, everybody's cash flow statement is different. Um, and just because one company pays dividends does not mean every company will pay dividends. That's another question I get. They'll put some information into the tracker and say, hey, Boeing says it's not going to pay me anything. And it's like, well, I hate to be the bearer of bad news, but unfortunately, Boeing suspended their dividend payments. Or somebody will be like, why doesn't Amazon have a number here? And I say, I hate to be the bearer of bad news, but unfortunately, Amazon at the moment doesn't pay a dividend. And so just do a little bit of your due diligence, and hopefully through time it becomes a little bit more relevant for you guys in understanding and a little bit more second nature as to what's going on. And this is nice because you can kind of see, you're getting your 51 cents every single quarter, and you kind of need to know what ex-dividend date is, and that thankfully is already built into the tracker for you guys. So if you have a watch list, it'll be right there for you guys, or you can just look it up on Yahoo or NASDAQ or any other sort of company that helps track these sorts of things. So taking this moment and now kind of transferring to the how we can actually do some goals versus actuals and monthly analysis. But before we get to that, do my ceremonial duty that I do every video as of late and say, hey, last 90 days, about 2/3 of you guys to 3/4 of you guys aren't subscribed to the channel. So this is the second or third time and you really enjoy it. That's you, Bill. I'm talking to you. You've hit the like button a couple times, but you're refusing to hit that subscribe button. Maybe just because you're not used to it yet. Really would appreciate that so that you can continue to learn a little bit about this dividend investing community and have the opportunity to ask questions and be a part of our live streams. Also, if you have any questions and you want to ask them, we have a WhatsApp group. Anybody's available to join. We have people that have yet to start investing to people that have up to $500,000 or maybe even more, like myself, is around that boat. Message me at 1-868-769-0511. Just say, hey, I want to join the WhatsApp group. We'll get you in there. You can talk as much or as little as you want. You can turn it on mute. You can leave the group. No harm, no foul. It's completely free. We just want to make sure that everyone's getting the sort of education that they want in this. So feel free to leave me a message and we'll get you in there. Do it on WhatsApp. If it's a regular message, I unfortunately won't be able to respond for international texting fees. So make sure you do it on Wi-Fi through WhatsApp. Yeah, let's hop right into specifically talking about a little bit more about the tracker here and year-over-year growth and how you can kind of track this for yourself. So I used to, in my old Excel spreadsheet that I kind of had built starting back in 2013 timeframe, had this back like all the way back until the end. And so I've recognized that I'm kind of in a different magnitude from where I was back in 2012 and 2013, fortunately. And so what I decided to do was kind of clean it up, and since we're kind of using this going forward for hopefully helping a lot of other people, I think a lot of the folks that have really joined the channel recently have been only investing for the past year and a half. I'm not singling anybody out. I know there are some folks that have been investing for 20-30 years that watch the channel as well, but I think some of these folks that are just starting are really utilizing these to try to understand, is dividend investing for them, and how they can continue to grow the profiles going forward. So you can see that this tracker kind of has a whole bunch of different things in here that people can use to track. And so you can see we have things all the way dating back to January, even late 2013 timeframe. You can see this is my monthly dividend income that I kind of have in here, and then the forecasted next 12 months or so. So there's a whole bunch of different material in here that you can kind of look at, but this is being tracked back here. So if you have this by month, you can go back, and it doesn't necessarily have to start all the way from the beginning. Whatever you're comfortable with. Let's just say, you want to start as of 2020 because that's the most relevant information you have, and going forward, you could easily do that. And by the end of every month, you could say, okay, well, now that we have this month in here, we can type it in manually and kind of keep track of it. So what I basically have in here is 2020, 2021 going forward. And so in this tracker, if you kind of go back to this forecasting and received, you can go back like all the way to 2013, 2014, track this all the way if you want, or you can just say, hey, this is how much I made per month. But for this particular example, since I'd kind of restarted from scratch and built this up so it's a little bit more automated, I just have 2020 and 2021 built in here because obviously I built this earlier this year and was more concerned about forecasting and things like that rather than tracking every little dividend in the past. I don't need to know what, say, Boeing paid me, or let's just take more of an example, um, what Bank of Nova Scotia paid me 3 years ago. I'm more concerned about what my monthly totals were because that's what I'm kind of keeping track of. And so what you see here on this very C column here, in both 2020 and 2021, is the expected totals. And so as you start to receive these dividends, you kind of fill them in, right? So they're forecasted. You kind of would come in at the end of the month and you would say, okay, AbbVie, did you actually pay me in May $138, right? And if they did, you would type that in. You know what I mean? Just like I did for, say, column 20 here. I went in, I said, did I get paid my $121? And the answer was yes, I did. So I copied that in there. So that way it's hard coded, never changes, even if, say, like I were to buy more shares or the dividend were to be increased, like it did, right? So they increased the dividend, so it's going to go from 121 to 138 now, and then it kind of gets carried forward. So that's kind of what we're trying to do here, and we're trying to link that to this dividend analysis tab. And I had done this already for 2019, so I had all the numbers in my previous spreadsheets that I had in iCloud, and then I transitioned to Google Numbers here. And so what I do is simply just look at this, go to January, and you can see the formula is already in here, but I can go to equals. And because we have this already built, you just immediately just go back to this. And let's just say for now, these are empty as an example here. So I say empty because, we're trying to build it back up. And because everything's kind of stacked on top of each other, we just kind of click and drag and it'll read all that, right? It'll kind of come back down and be like, okay, well, this is February, March, April, and it's kind of built the same, right? So you just have to click and drag. It's as simple as that. And the same thing with the 2021 table. You just have to kind of come back and be like, okay, well, where am I starting at? Going to 2021 should be 974.56, rounds up to 975. That's fine. Click and drag down, and the same shows up. And then that gives you a little bit of an ability to kind of come into this year-over-year growth tab and show specifically month over month what happened. You could be buying and selling out of positions. You could be trying to even out your monthly income. So what hopefully this year-over-year growth is trying to at least show you is if you're continuing to add capital to the portfolio, fingers crossed, you're going to be able to increase your year-over-year growth with respect to your dividend income. So let's just take 2019 to 2020 January, for example. I got paid a special dividend in January 2019 from my BHP shares, and BHP sold some assets, onshore assets, and they basically paid a special dividend to the shareholders. And so I got an exaggerated payment here. So you can see mostly in January, the first month of every quarter, back in 2019, I was getting paid like $400 to $500 every single first month of every quarter. And you can see this big jump here in January where it was like almost $800, which was abnormal back then. So you can see it was like a special dividend. It was like $200 or something like that. It was awesome. I took it, reinvested it back into the company, bought myself like another, I don't know, 8 or so shares, and that'll end up paying me like another $16 every single half year because BHP pays half years. But anyway, so you can see just looking at that, I didn't have that special dividend in 2020. So most of the months that you see are actually increasing, obviously because I'm continuing to add thousands of dollars every single month to the portfolio because fortunately I'm allowed to do that with my salary at the moment. And you can see in January I actually went down 3%, which was surprising to me. And initially I was very confused. I was like, why? That doesn't make sense. I'm only adding capital to the portfolio. I don't really sell many of these positions. Why did it go down? And so it actually realized that that's kind of when I went to dig back in, which is the niceness of having these sort of trackers. You can see, oh, wow, BHP paid me this large dividend that I wasn't even expecting, because normally BHP pays in March and September of every single year. So I was like, BHP, okay, January, what? I don't expect a January payment for BHP. What's going on? And that's when you can kind of understand what's going on with every single one of your payments. And so the hope is that you can kind of utilize this to track your growth. Is it going up uniformly for every single investment that you have, or is it kind of being favored to one specific month? You can see I generally favor companies for some reason that pay me on the third month of every quarter. So that's like your BHPs that pay March and September. That's your Wells Fargo's. That's your, I think JP Morgan also does the same. And for some reason, I just keep investing in companies that pay on the third month of every quarter. And so I have an obscure sort of look here. The second and first month of every quarter kind of flat in line with each other. And then you have this larger third period here. And you can also see, because BHPs pay semi-annually, the difference between, say, March to June to September. You can see March and September are relatively close, and they will be relatively close in 2021. But you can see here in 2021, this June number kind of being dropped down. So hopefully that allows you to kind of understand what is going on here. And once I get through with a month, let's say April was something that we just got done. I have everything hard coded in here for April, so all my numbers that I was expecting to get paid are now red. I could then take this 747 number and move it over to here. And you could do another thing in here as well, which is kind of this graphic here, or this table is kind of feeding this, which is the dividends that I'm expecting per month. And you could easily do the same. You can kind of click in here if you're tracking, and you can kind of go back and be like, okay, March 2020, let's go back to this forecasting and received. And you could say March 2020, click, enter, and boom, you'll expect to get your 1400 relatively quickly. And it is what it is then, and then it'll show up in your graphic, so that way you can track it with relative ease and be able to kind of say, okay, well, comparatively to the last months and compared to what I'm forecasting in the future, how is it looking? Am I meeting my goals? Am I not meeting my goals? And that can hopefully, fingers crossed, save you time in the future, and at least kind of frame and manage your portfolio a little bit better compared to where you were before. That's what we're trying to utilize the tool for. We're trying to make sure that the tool is helping us manage our portfolio, grow our portfolio, let us learn from our portfolio. We're not utilizing the tool to make our lives more difficult. We're utilizing it to hopefully shed some light on every single piece of analytics that we would want to do. Are you expecting more even monthly dividend payments? Are you expecting more money on the third month of every quarter like I generally get? And this is generally how my portfolio has been. Or maybe you want to even it out. Maybe you want to find like, okay, well, this company is paying 5% yield in the third month of every quarter, and I really need to up my first and second month. So you'll look and try to bring this, say, big yellow bar down, and try to bring these two yellow bars in January and February up, so you get things a little bit more even. So that way every single month your bills come in, and you don't necessarily have to wait for the third of every month to pay off things. You have a relatively more consistent dividend payment kind of coming through month after month. And that kind of brings me to the goals versus actuals tab. So in here it's called sheet 8, but I continued it on the downloadable version for you guys. I think I edited it out here a little bit for you guys. But what this is allowing you to do is kind of highlight specifically what dividend companies you're kind of have in each particular part of the portfolio. And this can get a little bit tricky, especially if you don't really highlight it and put everything in a box. But let's just take this 2020 IBA number, for example. It's the sum of a bunch of different companies in my forecasting and receive tab. So let's just do a quick look as to what I mean by that. So we're going to do the same. We're just going to kind of do it together, but we're going to do the sum of, let's just go to the forecasting and receive tab. And I know for a fact that everything here between SPACs and all the way down to, I think it's my Wells Fargo company, position is in my individual brokerage account. So what I can do is then copy all those, and what it's going to do is say what my expected payment is for all of 2020 for every single company in my individual brokerage account. And then I would do the same for YouTube Moolah, my IRA, my M1 Finance, and so that way I can kind of keep track of, are each of my accounts going up as expected. Now maybe you want to do this, maybe you don't. That's fine if you don't. I'm not saying that you have to. You could easily just say whole account. You can split this up however you want. What I generally do is I try to keep track of all my different accounts to see, am I building? Am I, going up? Am I taking a step back? Giving myself the chance to look at any analytics possible to see if I need to change anything. And I believe that I made a graphic for you guys. Maybe I didn't, but I know in previous versions, in the iCloud version, I did make a graphic so you can kind of see how things are going up in the future. But another thing I wanted to do, and I need to go back and do it on my own because I generally make updates on yours guys's, and sometimes I don't end up making them on my own. But what this hopefully is doing is you could also set like an income goal for the year. And what I actually have in here is back all the way to 2012, 2013 timeframe is the income I've gotten all the way annually since then. And you can see I started off with like $1 back in 2013, $262 back in 2014, and growth and growth and growth and growth and growth, right? All the way to last year, I made $8,900 in dividend income. That doesn't include YouTube or any other sort of income that I got from Shopify or my W-2 job. But what you can see here is just from dividend income, what the actual year-over-year increases are. And so you can see I've been trying to diligently increase the amount of income that I'm getting every single year. And as the numbers get bigger, generally speaking, the percentage increase gets smaller. That's to be expected. But what the hope is I can continue and get an idea and close to 57% returns for the next 2 or 3 years, and then hopefully 30% every single year after that. Things will change, priorities will change, the market will change, and so that might dictate what actually ends up happening. I might not invest in stocks at all. It might be something like physical real estate. And so things can change. But at least what I can do is put up goals for myself in the future and help dictate what I want to do. So what I can come up with is one of two ways. I can do this manually and say, okay, I want to be a 57% increase from, say, 2019 to 2020. And that's this $14,000 goal here, the one that we've been talking about quite a bit on the channel. And then next year, I want to go from 14,000 to 21,000, which is a 50% increase. And then every year after that, I'm going to be 30%. You don't have to use that percentage at all. I mean, maybe you kind of go back and do some analytics with respect to your portfolio, and you say, hey, I'm cool with 10%. If I can get 10% every year in dividend increase, I'm excited about that. Say you're at 5,000 a day, that's an increase of $500 next year. That'll be $6,100 the year after. I mean, you'll look great, right? I mean, if you get 10% a year and you hold that consistently, you'll be phenomenal. So I'm a psychopath, so I try to push myself as hard as I can with respect to dividend growth, and I try to push the barriers a little bit. And so that's why, I've been seeing that I'm able to increase, a pretty drastic margin. You can see just how quickly it's gone up over the past couple years. Part of that is dividend contributions back into the portfolio, and then I believe another part of it is really just focusing and trying to be a little bit more frugal on myself and focus more on the dividend investing portfolio, spending a little bit less money on stupid stuff, and also getting the increases at work and stuff like that, and not really having lifestyle inflation. So I'm excited if I get 50 to 60%. At the moment, you can see based off of where we're at, we're looking at about $13,310 for the year. That doesn't include any additional capital contributions. That's just the stocks that we have in the portfolio at the moment. So right now we're looking at about 49% increase year over year, going from this $8,931 to $13,310 if we're able to not get any more dividend cuts and not increase any capital contributions to the portfolio. So we're down comparatively to where we want to get. We are at 49% now. We want to get to 57%. So yeah, what this basically then shows you is how much capital you kind of would need in the future to be able to get to that point, right? And specifically for this, if you kind of utilize the income that you have, it allows you to try to understand how to get to that 14,000 ish 500 goal, and or $14,000 goal, and how much capital you might need. So for example, if once I go to this $21,000 goal in 2021, hopefully I meet my 2020 goal of 14,000. If not, this might be adjusted a little bit. But based off the dividend yield that I have, it kind of goes back to what my kind of dividend yield is back in this overview tab. Kind of takes this number here and says if you kind of add that across, just relative ease, of what we have in this portfolio tracker. You could be like, okay, we're going to try to average what the portfolio average is. You need $123,000. Obviously, that's not a surprise to me. I'm trying to increase the portfolio yield by 50% next year, so it's going to require a huge amount of capital, understandably. And so you could easily change this, right? I mean, you could easily say, I want to be conservative and say 3%, right? I mean, you can change that and say, I need 3% capital, rather than rather than the, 5% that people are kind of putting in here. And so if you do only the 3%, you're going to need a crap ton more. You're going to need about 400 and some $1,000, rather than what we had in here before, which is 123. So just kind of, I don't know if that makes sense or not. You might have to do some editing on that specifically, but that can allow you to kind of understand where you might need to be, in your capital in order to meet your sort of goals. And so at the moment, it kind of is based off of what's your portfolio looking like now, what your portfolio average is. And if you want to kind of increase that, you can kind of come in here manually and increase that as well. But it's kind of built out for the average portfolio yield at the moment. So if your portfolio is very low yield, it's going to show really high numbers, or you can kind of bring that number down by one, investing in higher yielding companies, which will bring the portfolio average up for yield. Or you can come in here and be like, I'm only going to invest in companies that have 3%, and change this sort of graphic here, this particular column, for that. Now there's other things in here as well, like the monthly dividend income. This is basically just taking the average, or the expected at the moment, and dividing it by 12. And so you can utilize the formulas in here to build this out. So as you get to 2021, maybe you want to start forecasting 2022. You would just kind of come in here and use the same formulas for 2021, and just build it out for 2022. And of course, it's going to hopefully be reading the same stuff in here. You guys will have the formulas if you download the sheet, or you're copying them off the video here right now, which is perfectly fine as well. But we also have very similar, the dividend goals for that year, right? So that's just taking this yearly income goal, dividing it by 12, so we kind of have an idea as to what kind of dividend income you might have. And I think on your guys' sheet as well, it puts things in a monthly perspective as well, so you can kind of put a box in here. And I think what I do have in either my iCloud version or the Google Sheets original download is this monthly income sort of tab in here. So you can kind of say, okay, well, for this month, we have specifically the previous year's worth of monthly income. This is the forecast based off of increasing it by 30% a year. And you can change this, I mean, 20%, let's just say, and it'll change all the numbers automatically for you guys. So I just have it at 30% to be aggressive. Hopefully other businesses kind of come in and help increase that. But this is basically saying, in a few select years, we're going to be getting back all the way up to close to $8,500. And you could say, okay, well, I only really need to be making $4,000 or $5,000 a year. And so this might be able to, or a month in income, right? So you can kind of utilize this to say, how quickly do I need to grow the portfolio in order to get to my income goals? Maybe I'm 65, maybe I only want to invest in companies that yield 3% on average. And so you can help play with this and help it kind of build how you actually want to, I guess, use that. And there's a graphic associated with it. I put a little box in there to basically kind of give myself a window. At what point am I like lean financially independent? Like I'm being able to pay bills and stuff like that. And at what point am I actually like extremely financially independent, living the luxury life? Not obviously boats and jet sort of life, but being able to buy myself a decent car, use that, go on trips every couple of years, every year, maybe if I want to have that more affordable lifestyle, have an extra hundred or have an extra $1,000, $2,000 in my pocket every month, instead of just having that, $4,000 to $5,000 that I need. And so, yes, if I were to kind of continue this kind of speed, 3, 4, 5 years from now, I would be quote unquote financially independent. I need about 2,000 to 3,000 at the moment to kind of meet bare expenses, but I'd rather wait another year or two if I continue to grow at 30 or so percent a year and get that $4,000 to $5,000 range in about 5, 6 years, so that way I'm living a better life, right? Not necessarily need to be too concerned about pinching pennies, and if I want to go get like a nice luxury or go out to eat or something, I can do that instead of saying, oh, I need to eat peanut butter and jelly sandwiches. So really hope this video finds you guys great and it really helps you guys understand how you can potentially utilize this tool. I understand that this was kind of built by somebody who built it for themselves, and so diving into that can be a little bit tedious, especially since there's a lot of formulas and a lot of things that you maybe wouldn't have called it, let's say yearly income goal or monthly dividend income goal or monthly dividend goal. You might have called it something else. And so kind of picking this up and not having that kind of perspective coming from me, may have been a little bit confusing. So I respect the questions, and I really hope that this video allowed you to kind of answer some of those questions for you guys. And yeah, I think I'll cut it off there. If you guys have any other questions, leave them down in the comment section down below. And don't forget, if you're curious and you want to join our WhatsApp group, completely free, different range, a bunch of different people in there, starting with $0, and some folks like myself have close to $500,000. Join us, man. Text me 868-769-0511. More than happy to talk to you guys and get you guys on your feet, whether it's about the tracker, whether it's about anything. Me, Kyle, Passive Income Investor, is also in there, and a couple other content creators have been in there. Some of them have joined, some of them have left. Maybe probably because we do messages in there quite a bit. I would say there's probably 100 or so messages back and forth every single day, people chatting about recent events and everything like that. So look forward to talking to you guys on our next video, WhatsApp group or Facebook group. Love the community, man. Keep it up. I'll talk to you guys soon. Cheers.